Hey, Amanda, how's it going?
It's going well, Charlene. How are you?
I'm good. I'm good. I'm excited to talk to you once again. And we are going to talk about group purchasing and a 6-month mortgage. So let's get right into it. I am Charlene Williams. I work with Real Estate Homeward. I've been a broker for 15 years, and I am excited to talk to Amanda. Go ahead and introduce yourself, Amanda.
Yeah, thank you, Charlene. So my name is Amanda Pivar, and I'm a mortgage agent with Mortgage Connection. And I have been an agent for over 10 years, but in the industry for over 12 years. And we are here to answer all of your mortgage needs.
Excellent. Thanks, Amanda. So, what I want to talk about today is group purchasing.
Mhm. What a
Mhm.
great opportunity right now. A lot of people, it's hard to save a down payment or to qualify for the stress test, but we're seeing more and more investors actually get rid of their duplexes and their triplexes, which is an awesome opportunity for clients to buy with another couple, with their parents, the family member to get in the market and be able to afford these homes.
Right. And the cash flow positive homes, like a triplex, you could live in one and rent out the other two units or something such like that, right?
Absolutely. I've done some numbers for some clients recently on some triplexes, and they're living in one unit and they're renting out the other two, and they're cash flow positive, and someone else is paying their mortgage. How great is that? You're basically living expense free and earning appreciation on your home at the exact same time.
That's amazing. So, would you be able to, for example, get together with a group of people and all three of you, for example, live there? Like a $1.2 million triplex
Mhm.
in the city of Toronto. What would be involved in that? You need 20% down, is that correct?
That's correct. So you need 20%, and we could put four people on the mortgage for that property. We're starting to see a lot more of that with families as well as friends doing it, where they're having one, say, three siblings, all with their families purchasing these homes together. You do need to put 20% down payment. And then you would each go on title for equal unless one gave more down payments. Let's just say one person gave more down payment. You could treat it as shares and own more shares of that property. One of the biggest things when buying with a group is you definitely need to have a lawyer involved, not only for the transaction to close, but also to do documents behind the scenes of how the property is being shared, what happens if someone wants out of the property, to make sure that those decisions are done. But once those decisions are done in a contract, group home is a fantastic way of buying and being able to actually get in the market, build equity, and then either A, down the road, all move out of a house or keep it as an investment property. These triplexes, when you already own them, are really cash flowing. So it's a great opportunity to either one, have a home to live in long term, or start building some wealth by living in the short term and then moving to your own property, but keeping an investment.
That's a great idea. And am I correct in assuming that you don't have to be a corporation in order to do that?
You do not need to be a corporation. And honestly, with the
Excellent.
new capital gains, you probably don't want to be a corporation anyway, the changes. So if it's your
Right.
primary residence, you definitely want to do it as an owner occupied so that you're not paying capital gains when you sell. Great thing, if all three of you are living in there, nobody's paying capital gains when it sells.
Right. That's amazing. So these are opportunities that are out there, and I know that there's quite a few on the MLS. Like investors are, they're getting their money back from
Yeah.
when they purchased 20, 30 years ago. These are triplexes are a really good idea, especially with our population boom.
Absolutely. We're definitely seeing a lot of triplexes moving and investors moving on to the bigger thing or retiring. They just don't want to handle it. They've owned these properties for 30 years and now's the time to get out.
Yeah. So there is opportunity there. Tell me, Amanda, about the 6-month mortgage. If you're in a position to renew your mortgage this year, early next year, Bank of Canada rate, and all of those things.
Yeah. So let's just say you had bought your home 5 years ago and you had put less than 20% down payment. That mortgage was an insured mortgage. That insurance premium stays with you while you own the home. And one of our lenders has a product called the 6-month mortgage. I love this product for renewals right now for the biggest reason of buying time. We're in a time where we're starting to see things change. We're starting to see our rates come down, but we're not quite there yet. I think the conversations we're having about rates right now will be very different in 6 months. So this is a great opportunity for anyone who's a high ratio mortgage to renew, but buy themselves some time to let the market keep adjusting. And then at the time of your mortgage, the 6 months being up for renewal, you then lock in for either the 3-year, 4-year, 5-year fixed or 5-year variable, whatever is best that time and whatever our market's showing will be your better option.
And you're able to provide people with their options in 6 months or whatever
Yeah.
the case may be.
And
That's
then
amazing.
exactly. And then even like some of my clients who are doing it right now, you can do it sooner. So let's just say September comes. Sometimes we see rates come up in September a little bit. So a client of mine who is doing the 6 month right now, if we're starting to get some indication our rates for the fixed might go up, they can lock in at that time. They don't have to wait the full 6 months.
Right. Okay. So these are really, really good options. Gonna ask you another question out
Sure.
of the blue. Um, and I'm gonna hold you to your prediction. Do you do you see the mortgage rate coming down? I know our next announcement is July 25th.
Mhm.
I'm not sure what they're going to do. I'm hoping that it comes down. What do you think?
I think it will. So my biggest reason as to why I think the July one's going to come down is the data the Bank of Canada is going to be using will be the June data. Really, June, even though we've already seen a drop, it's not really enough time to actually see how it's going to affect the market. So our June numbers most likely are going to look very good. Even though we saw our first drop, we haven't really seen the market boom like people were worried about, which is actually a good thing. That means that we most likely will see a decrease. Now, I don't want to predict September quite yet. It's too far away. We would have 3 months of data out by the September meeting, but I would be pretty shocked if we didn't see a July drop.
So at July 25th, and then nothing in August, no announcement in August, and the next one will be in September.
Yeah, so the bank will come back from their summer break, review the data that come out during their time off, and then make the next call. It's interesting. Some of the banks, 5 of them, or 4 of them, sorry, at the big five, are predicting that we'll see a total of 1% by the end of the year. And then one bank's predicting 0.75. Either which way, that's a fantastic drop. So let's hope that the 4 or the 5 are right and we see a full 1%.
That would be amazing. Wow, so much insight, so much information. Thank you so much, Amanda.
Yeah, and then just one more point on that. So when economists were predicting our rate drops for this year, they were predicting that if we did see a 1% drop, we'll see about a 9% increase in pricing. So I feel like we can't stress enough anyone who's kind of thinking of getting in the market, now is your time. Because if you wait for that 1% drop and prices go up, that's just going to cost you more in the long run.
9%. Wow. That's
Yeah.
that's not that's not a bad number. I mean, that's a healthy number. So, yeah, I guess if you're looking for a house, you should probably purchase it before the 1% rate drop.
Exactly. And speaking of houses to purchase, you have some great listings right now, I noticed.
Oh, yes. Thank you for asking. I do have great listings. I have a 2 bedroom, two full bathroom condo at 36 Park Lawn, and we're priced at 870. It's
Wow.
a really, really nice building as well. Um, yeah, I think it's a really good price for the second lowest price in the building, and my client wants to move. So if
Okay.
anybody's interested, yeah.
I actually had a client buying that building back in 2021 for just over $1 million. So that's an awesome opportunity in that building.
It totally is. And he's got great views. I mean, it's only the fifth floor, but don't let that fool you. The view is right to the water. So yeah, it's got excellent views. And I have another townhouse and unit with lots of windows in Brampton. That's a 3 bedroom, fully finished basement. It's got a carport. It's got two full bathrooms as well. Starter home, right? On a
Yeah, yeah,
beautiful cul-de-sac.
yeah.
Yeah,
And I mean, it's amazing because that means you only have neighbors on one side, so it's quiet.
exactly. Exactly. It acts like a semi. We've got it for 760 as well. So yeah, give me a shout if you're looking for a new home in Brampton or Etobicoke.
Yeah, and both the properties you have, it could be someone's starter home. So excellent opportunity for
Yes.
first-time home buyers to get in
Mhm.
before we see that 9% increase.
That's right. So thank you so much, Amanda, for asking. And yeah, I guess we'll wrap it up. But thanks again for having these conversations with me.
Absolutely. Thank you for having me. I love having them, and we'll definitely have our next one up soon.
Great. Thank you.